This presentation is to help us better understand the expanded profit and loss statement. Just as we've done before, there's some things that are very similar that we already know about. Net sales. All of these things are cost of goods sold. Net sales minus cost of goods sold equals gross margin. And gross margin minus operating expenses equals profit. So we're just adding a few more things to the picture. So let's stay with our basics that we've been accustomed to, and we'll say that $100,000 is our net sales. And we always know that the net sales number is 100%. So let's kind of fill in a few blanks here. And again, just like a puzzle, this is exactly what we do. So let's say, for example, our gross margin is 55%, and we know that our profit is $10,000. We'll do some other little estimations here that our invoice is 35%, transportation is 2%, alterations are 1%, and we'll say we have a 2% cash discount. How am I going to figure all of these things out? So first of all, just like we have done before, we multiply to get dollars. So in order to find the invoice cost, we could say that that equals $100,000 times 35%. And again, we're always clicking in the box. Transportation equals net sales times 2%. Don't know maintain markup yet. We're going to figure that out. Alterations are 1% of our business. So equals net sales times the alterations percentage. Cash discounts are things that we get money back from the vendor if we pay our bill in advance. So that equals net sales times, we get a 2%, almost like a rebate. Gross margin is 55% of sales equals net sales times 55%. So, we don't know these numbers, but again, we can figure that out. We know that gross margin is operating expenses plus profit. So we can figure this out by saying, well, okay, gross margin then minus profit must be operating expenses. In order to get percentages, we divide by net sales. So equals our operating dollars divided by net sales, and we get a percentage. And we can do the same thing with net profit. Net profit percentage equals net profit dollars divided by net sales. So the next two parts to figure out is what's maintain markup and what are gross sales. So we'll start up here first. Gross sales are everything we ring into the register before we take reductions and markdowns, before here's markdowns or reductions, before we do stock shortages, and before we apply employee discounts. So if an item was, let's say we had a car and it was $150,000, that's what we'd bring into the register. We have a $5,100 markdown. We're going to subtract an issue of shortage of $600, and it was an employee, so they got a discount of $300. So they're actually only going to pay $144,000. So we have to estimate all of those things in there. So let's say our reductions are 2% of sales. So anything above $100,000 or 100% is above the line. Okay, so this is the top line, and then we have what's called above the line. So we know that this is going to equal, we're going to add, so it's going to be net sales percentage plus our reduction percentage. So it's 102%. Perfect. So reductions then, how are we going to figure that out? So that's going to equal our net sales times our percentage plus, we have to add back in net sales. Oops, that's actually gross sales, isn't it? Good, thought I could catch you on that one. Okay, so actually then if it's going to be gross sales equal, and then it's 102% of 110,000. So here we go. So 110,000 times 102%. And so this is a 2% number, or we can take gross sales minus net sales equal our reductions. The next thing to talk about is MMU. What's MMU? It means maintained markup. And what we do in our business is we have to analyze vendors to see which ones are really working well for us and which ones are not. So this area is considered cost of goods sold. So in our other demonstration we had cost of goods sold. It's broken into two parts. It's broken into the top half and the bottom half. The top half are things that you actually negotiate with a vendor, the actual price for the items that you've purchased and the associated transportation costs. That's directly related to vendor performance. So we consider that an important part of that dynamic. So a maintained markup then would equal net sales minus how much it cost us to buy the items minus our transportation. And our maintained markup then is $63,000. So why don't we include these two in that? We actually have alterations and cash discounts have to do with your company's performance, not the vendor. So in doing a vendor analysis, it would not be fair to have one vendor that we do alterations with and one vendor not. We would not be comparing apples to apples. So we can say that alterations are just part of running our business. Land's End, for example, will hem your pants. That's an alterations charge. Cash discount has, again, nothing to do with the vendor other than that's what you've negotiated you can get. However, your company has to be liquid enough or have enough cash to be able to pay its bills on time. So maintained markup is a number that we look at to determine vendor performance. Gross margin includes all of the other things related to the operations of our business. So in that particular case, our gross margin, this wouldn't even make sense now, right? We wouldn't have quite the same set of numbers, 55%. So we've got a little number missing in here in terms of the percentages. We can figure out maintained markup by saying it equals maintained markup divided by net sales. And we get 63%. So again, they're just examples of what to do. So as a refresher, in this part of the expanded profit and loss statement, gross sales are above the line. I'm just going to scroll down here. They include markdowns, stock shortages. We've either had theft or paperwork, internal theft, external theft, and employee discounts. So those are all things that we include in the expanded version of net sales. The expanded version of cost of goods sold is this section. We divide it up into two parts. These two parts include vendor performance and are added together in terms of being maintained markup. So we have these three things: Net sales minus the invoice minus transportation equals maintain markup. These two are added up together then as other part of the cost, and so we take a look at maintain markup minus cash or minus alterations plus cash discounts. Why is that plus when everything else is minus? It's because it's like a rebate. It's money coming back to us, so we get to add that back in. Hope this was helpful.